Hey, this is Justin with daytradethemarkets.com on Monday, April 28th. And I thought what I would do today is just have a look at the Nasdaq market. This would work on literally any market, but I had someone asking me about the Nasdaq, so I thought I would do it with this. And basically just start with a plain or naked price chart. And then I want to add evidence piece by piece to help you understand what each piece of evidence is telling you and how it can help you make better sense of the market. So, in the NASDAQ today, we basically closed right where we opened the day. So if you look at it that way, not much happened, but there was quite a lot of opportunity and action during the session. For day traders, that's what we're looking for. So, the way that we look at things is we start with this idea that we have at least with our software, we start with this idea that we look at the bigger picture. So we want to look at the bigger picture bias, and we also want to look at some bigger picture key levels. And we teach you how to do this, and we also do that for you on a day-to-day basis on our member center so that you can kind of just look at the homework that we do, essentially, the trade prep that we do, and follow along with that. So starting with that, in other words, going into the day, what I always like to do, and obviously the price wouldn't be here at the start of the day, but I like to draw these horizontal lines at the areas that we're monitoring, and also I draw an arrow on my chart to say which way our bigger picture bias is leaning. So again, when you're looking at the bigger picture, it's not the be-all end-all, but it's just telling you that the path of least resistance or the current is moving one way, and so all things equal, if you can go in the direction that of that current, the easier it's going to be for you, the more time you're going to have on your side. Same with these areas of support and resistance, bigger picture. These are areas that it's not necessarily going to act as support or resistance. We just want to see how the market acts, how it reacts at these different price levels. And heading into today in our report at 35.15 was kind of not really a line in the sand, but an interesting pivot that we wanted to watch to see if this market could accept below or get back above. So that's kind of the idea here. So heading into the day, all things equal, we would a little bit rather be on the downside. We want to watch what happens at 35.15, and then we just want to see how the market reacts at these different levels. And you can see that as we opened higher than we closed on Friday. We tested right here around 44, and actually sold off. Didn't quite make it down to the 15 level, came back up, paused for a minute, busted through the 51 area, didn't quite get up to 65, came back, tested this area again, and headed back down toward 15, didn't make it through there, and tested all the way down to 80, and we closed back around to 45. So again, these are just areas that we want to monitor as the day goes by to see how the market reacts. Not a lot to work with today in terms of major levels that we want to monitor. Sometimes, we'll talk about what our bias is and the scenario that would change that. So those are kind of those key levels that we don't test every day. Today was one of those days that we didn't test them, but these are just good areas to watch so that you know that if you're thinking about, for example, taking a short trade right into a level of support, you can be careful and vice versa. So that's just one piece of the puzzle again, okay? So other pieces of the puzzle that we want to look at is what we call, the next thing I'll look at is kind of the crux of what we do, relative aggression bars, okay? And to give you a little bit more background on that, relative aggression bars are what's really unique to our software. And what these are doing is they're telling you in real time basically what's going on beneath the surface of the market. So you're not just dependent on lagging technical indicators. You're not just looking at price action. You're not just looking at raw data either. You're really seeing what's going on under the surface of the market. So you can tell that when one side, buyers or sellers, is more aggressive, you can see that in real time on your chart. And not only that, you can see to the degree that that's happening relative to that market. So is there moderate buying or selling? Is there strong buying or selling? Or is there extreme buying or selling? These are absolutely imperative pieces of information that if you can have them, you gain an edge. Okay, and we can see, especially with these level 3 bars, do we get follow through? Do we get rejection? That's giving us a really good real-time roadmap to the short-term direction of the market. Okay, so the relative aggression bars are really the first piece of evidence that we want to monitor beyond the bigger picture. So let me put those on the chart now. Okay, so what I've done now is I've just added the relative aggression bars, okay? And so what you can see here is that we test at when we open, the first structure we have are some level 2 selling bars, okay? Then we start to get a little level 1 buying, and this is our first extreme bar, extreme buying aggression bar. It's a level 3 buying aggression bar. So you can see we've had a sell-off, then buying comes in. You see that in real time. Price didn't have to go to the highs. You see in real time we're getting some extreme buying that's coming in. The very next bar has follow through. It's telling us, okay, you better be careful being on the short side. Some extreme buying just came in this market. Then you can see some strong buying in here where we test this next level. Then we bust through on this next level 3 buying aggression bar. So again, what's that telling us? It's telling us at this moment in time, this market's making new highs. It's probably going to go and test. Certainly, it's gotten through 51. It's probably going to go test 65. That will be the most likely scenario. Now you can see it didn't quite get up to 65. And as we were making new highs, you can actually see some extreme selling coming into the market, okay? So again, you don't have to just wait for the market to prove it with price. You're seeing under the surface. You're seeing that some extreme selling is coming in. Quick follow through. We meander between these two levels for a little while, but we do get some more selling that's coming in. And here's some more extreme selling that's coming into the market. This is actually a case where we've got 2 level 3 bars in a row. This is one of my favorite trade setups, actually. It's what we call the sweet spot trade. You can see where you have 2 level 3 bars in a row. They overlap. That is an area that really is a nice trade setup in most cases. Does it work every time? Of course not, but it's a very high probability, high edge trade because it's showing you that the level of selling coming into this market is extreme. Okay, so and also the fact that it's with our bigger picture bias is even more in our favor. Okay, you can see we try to get a little bit of buying there as we go back and test that area, but then selling comes back in with some strong selling and then some extreme selling, more extreme selling, but it's met. This is kind of what we call a mini battle. You've got the level 3 selling. Within that, there's a level 3 buying. So that's telling us there's a bit of a battle going on there. If you're short, it's telling us, okay, we better be a little careful or at least see what happens here. There could be some buying that's attempting to come into the market. And you can see we can't get through the high of this level 3 bar, though. We basically test that to the tick. And then you can see we have another sell-off, another wave of selling. We get down to this level here, and we test what we always look is what happens at the high of these level 3 bars. Can that hold? Right in there. That's what we call our level 3 retracement trade. So here's another test of the high of that. And you can see it sells off and actually makes new low by a tick, but it doesn't do so. This is an interesting scenario. It doesn't do so with more selling aggression. Okay, it's just a gray bar on the new low. So it met our first expectation that we would think that the high of this bar would be touched and we'd go test the low. But you can see we didn't get follow through. So that's kind of a red flag. And then the fact that we don't get follow through below the low of this level 3 bar and price starts to creep up back above it, again, is a little bit of a red flag. And this is what we call our reversal trade, where we come back and test the high of that bar that was rejected. So you can see then when we don't make new lows, we start to attract some buying. Okay, failure to move lower, buyers step back in. Some extreme buying that's coming in. It's telling us, okay, be careful. Now we pause a little bit at that 15 level, but then some more extreme buying comes in toward the close. So again, what is this telling you? It's showing you what's going on beneath the surface of the market, so that you can see when you have extreme buying coming in off of lows of the day, extreme selling coming in off of highs of the day. A double wave of extreme selling, okay? Extreme selling on lows of the day that doesn't really have follow through. I mean, it meets our first criteria where we touch the high and then go test the low, but we don't have any follow through above it. And then it attracts some more extreme buying. It's just kind of giving you a bit of a roadmap so that you can, as a trader, as a decision maker, which is what you are as a trader, you're a decision maker, you can start to say, okay, I don't want to be long right now. I don't want to be on the short side right now. I can avoid making stupid trades. That alone is extremely powerful. And then you can see where there's extreme buying, extreme selling coming into the market, so that you can obviously make better buying and selling decisions along the way, hold your winning trades a little bit longer than you might otherwise be able to, bail out of losing trades a little bit sooner than you might have otherwise been able to, and so forth. So it's just all about increasing your edge. That's what, I know people that just trade with these relative aggression bars. That's all they look at. But that doesn't have to be all you look at. There's also other pieces of the puzzle, so to speak. And the way I like to think about this is each of these pieces of evidence, we just went over relative aggression bars, is like a piece of the puzzle. The more of the pieces of the puzzle that come together, the clearer your image of what's going on is, and the greater your edge. So we also have an indicator we call the high velocity moves. It's very similar to relative aggression bars, but it's just showing, it's kind of a redundancy, like an airplane has, 3 ways of overcoming a safety hazard. It's the same idea here. It's a redundancy. It's if for some reason this market's making a pretty strong move and we don't have relative aggression for some reason, the high velocity move is going to kind of make up the slack on that. So let me add those as well. Okay, so I've put on these high velocity moves, and you can see these are just kind of these boxes. So if you have a scenario where there's the market's moving with high velocity, most of the time that's also going to be encompassed with a strong aggression bar. But there's some cases where it's not, and in this case, like right here, it's just a level 1 bar in there. But it's telling you, it's giving you more confirmation that this selling wave that started up here is more in full effect. Same thing here, same thing here. It's giving you confirmation that this is pretty strong buying that's going on. So again, just another redundancy showing you which side is more in control of the market. Okay, so we've talked about the bigger picture bias, bigger picture key levels. We've talked about relative aggression. We've talked about high velocity moves. Let me just talk about deceleration and divergence real quick. Let me throw those on the screen. 1 second. Okay, so you can see the deceleration are these triangles and dots, whatever the case may be. Okay, and what these are telling us is that, for example, on let me just pick one out. This bar here that decelerated. Okay, it's telling us that bar has a lower low than the prior bar. Okay, now if you have a lower low in price and the level of selling aggression in this case was increasing, so the selling aggression was picking up, then obviously we would expect the market to keep heading lower. If, however, you've got a lower low than the prior bar, but the selling aggression within that bar is actually decelerating or decreasing, then we've got a likely turning point within the market. Okay, so that's what that's telling us. It's as if you think about the relative aggression bars as looking at the gas pedal on your car, think of the deceleration as hitting the brake pedal of your car. Okay, it doesn't mean that every single one of these is going to turn around and be the high or low of the day, of course. But what it is telling you is that in the very short term, this market is slowing down. The brakes are being hit by this market. So if you just looked at these alone and tried to trade these on their own, there's not enough edge there. You don't want to do that. But when you can combine that with other factors, with other things that you're looking at, other pieces of evidence that you're using to make sense of the market, that's when you can use these to have an edge. So they can help you confirm an entry, they can help you confirm an exit, whatever the case may be. It's just giving you another piece of evidence, a small piece of evidence, but another piece of evidence that this market has potentially hit a turning point. Okay, so that's what these decelerations are doing. That's just another piece of the puzzle, not the biggest piece, but another piece of the puzzle that can help you make better sense of what's going on. Okay, so again, we've talked about bigger picture, talked about deceleration, we talked about relative aggression and high velocity. Now let me put on the filter, and then I'll talk about the support resistance zones. Okay, so the filter here is down at the bottom of the screen. Okay, and you can see that when we start to have some extreme buying, our filter went green. We started to get some pretty good selling. Our filter went red and dark red. Went to green here, right in here. It's just showing us that all things equal, in the short term, the path of least resistance of this market is potentially up, potentially down, potentially up, okay, or strongly up, depending on the shade of the red and green. And obviously, you can change these the colors with what you want. The way I think about this filter again, just like everything, nothing on its own is the be-all end-all. Nothing on its own is everything, okay? So you don't have to have some kind of rule that I'm only going to take long trades if the filter's green. What you would want to think about is, okay, I'm thinking about a long trade, for example. Let me check the filter. Oh, it's green. Okay, that's just going to give me that extra 1 or 2% confidence that I'm on the right side of things. Now, what happens though if you said I'm thinking about a long trade and then you look at the filter and it's red? It doesn't mean don't take it. It's just saying, you know what, the edge on that trade is slightly decreased. You'll probably want to think about it twice, really think it through, make sure that it makes the right sense for you. And just look at it that way. So again, just like the deceleration, it's an extra 1%, 2% confirmation or think twice type of an indication. Again, everything adds up though. Everything matters. So the more information you have that's quality, the better decisions that you can make. Okay. We've also got these support resistance zones here. You can see, here's a support zone, here's a resistance zone. Here's a resistance zone, here's a support zone. Here's a resistance zone, here's a support zone, okay? What that's telling you is all things equal, just the same way, all things equal, if you're thinking about taking a long trade here, it's a good spot. the support there is going to add that extra 1 or 2% confidence to what you're looking at. If you're thinking about taking a a long trade here, all the better. If you're thinking about taking a short trade here, you might want to think twice. If you're thinking about taking a long trade here, you might want to think twice. Now, there's other factors that go into it, but it's just giving you that extra piece of information so that when you put it all together, it makes a lot of good sense. So, for example, we talk about this idea of confluence. We're looking for a lot of pieces of the puzzle to come together. Just to give you an example, here would be a really nice example of confluence right in here. Okay, let's think about what we have. We've got the bigger picture bias is down. Okay, we've got the filter at this moment in time is down. Okay, so those two things in our favor. We've got a lot of selling aggression and high velocity that's come in to this point. Okay, that's in our favor for getting short. We've got more structure in that the high of this level 3 bar is right in here. We've got more structure in that there's a resistance zone right there. We've got more structure in that this is a key bigger picture level. We've got a lot of pieces of evidence in our favor right in this area, okay? Does that mean that if you took a short trade at that zone, it's going to always work out 100% of the time? Of course not. If that's what you're looking for, you're going to be disappointed. But if you can think about it in terms of the more evidence that you have, the better your edge is. And if if I could take that trade 100 of 100 times, I would do it because there's a lot going for it, okay? It's that simple. There's a lot of pieces of evidence that have come together. If we look at all of the pieces of evidence, the more of these there are that come together at any given time, the bigger our edge. And that's really the name of the game. So it's all about making better decisions. You make better decisions by having better information, better knowledge, and better self-awareness. And we think this software does a really good job of giving you better market knowledge and better market information. So again, a little bit of a long video. I appreciate if you stuck through this whole video, but sometimes I just like to do videos where we break it down piece by piece and kind of go over the basics. So let us know if you have any questions about that, and we'll talk to you soon. Thanks.